Hello students, welcome to the lecture number 4 of Strategic Performance Management. So we have started our chapter number 1, that is Introduction to SPM, Introduction to Strategic Performance Management. So which topic we were learning is Financial Performance Analysis. We were learning Financial Performance Analysis. First I told you what is Financial Performance Analysis, who performs it, right? And then we started tools for financial performance analysis. What tools are used to analyze the performance of an organization, the financial performance of a company or organization, right? So I told you that there are total 5 tools which we have to learn in our syllabus, which are, the first one is comparative financial analysis, then common size statements, trend analysis, cash flow and its analysis, and at last ratio analysis, right? So I told you that we have to learn all these 5 tools in our syllabus. These tools are used to analyze the financial performance of any organization or company or an entity. So the first one, comparative statements, we have already completed that. In our last lecture only we completed comparative statements. And now we are going to start the second one, that is common size statements. We are going to start common size statements. Common size statements, tool number 2. What we are learning? Tools of financial performance analysis, in which the second one is common size statements. Now see, I told you in comparative financial analysis, we prepare comparative statements, right? So, in comparative statements, we compare. What we do? We compare our current performance with previous year's performance, right? We compare current year's performance with previous year's performance. What we do? We compare our own entity's performance with our own entity only. Current year performance with previous year's performance. But in common size statements also we compare. But the difference is that we compare ourselves, our own company, our own entity with some other company, with some other organization in the same industry. So common size statement is all about comparing our own organization or company with some other company or some other organization in the same industry. If we are a mobile manufacturing company, we will compare ourselves with another mobile manufacturing company only. We will compare with company in the same industry. So why do we compare? What is the reason for comparing? To find out that we are enough efficient or not. We are enoughly efficient or not. We are efficient enough or not. So we compare our performance. To see that where we are lacking, if we are good or not. So comparison is necessary sometimes. So common size statements is all about comparison with some other organization. Okay. So the next question is how it is performed. See, in common size statements, we express each and every element. As the percentage of a common base. We express each and every element of income statement and balance sheet as a percentage of a common base. Now, what is common base? What will be the common base? So, if in question income statement is given, turnover will be taken as common base, and if total balance sheet is given, total assets will be taken as common base, total assets or total liabilities. And you know that both the sides of balance sheet, that is the total assets and total liabilities, are always same, right? So we can take total assets also, total liabilities also, the amount will be same. Okay, so we have to express each and every element as a percentage of a common base, and the common base will be turnover in the case of income statement, total assets or total liabilities in the case of balance sheet. Okay, so I will give you an example so it will be very clear to you all. First, let's see what is given in book. First thing, the second last line. This technique is useful to compare the performance of a company with similar companies in the industry. With similar companies in the industry. So we are comparing the performance of our company with similar companies in the same industry. In this technique, net revenue means net sales, total assets or total liabilities is taken as 100% and the percentage of individual items are calculated likewise. Whatever we are taking as base, it will be taken as 100%. Okay, it will be taken as 100% and the percentage of all other elements, all individual items, we have to find out. Okay, so it highlights the relative change in each group of expenses, assets and liabilities. So is it clear? Whatever I have told you, is it clear? See, now let's take one example. Let's take one example for common size statements. Okay, so let's take example of A Limited, a company A Limited. Which is having a turnover of 1 lakh rupees. A Limited is having a turnover of 1 lakh rupees. Okay. Now, cost of goods sold. A Limited is having cost of goods sold for rupees 60,000. Then the next thing will be operating expenses. Operating expenses of rupees 20,000. Okay. And the balance amount is net profit. Again 20,000 rupees. So A Limited is having a turnover of rupees 1 lakh. Then cost of goods sold is 60,000 rupees. Operating expenses 20,000 rupees. And net profit again 20,000 rupees. Okay. So if you know that sale is equals to cost. Firstly, what cost we have incurred to produce that product. Cost plus expenses. Expenses incurred like selling expenses, administrative expenses and all. Then we have to add profit margin in it. Profit. Okay. So selling price is equals to cost plus expenses plus profit. You know that, right? So if you can see that we have figured out the sale amount by adding cost plus expenses plus profit. So in this sale amount, one part is cost, one part is expenses and one part is profit. So these three elements are making sale, right? These three elements are making sale. So all these three elements have some part in sale amount. So we have to find out the percentage of each and every element of all these three elements. We have to find out the percentage in sale amount, right? We have to find out the percentage, how much part each element holds in the sale amount, the base. So as I told you, if income statement will be given, we will take turnover as base. So here also we are going to take turnover as base. So if we will take turnover as base, it will be 100%. I told you, whatever we are taking as base, it will be 100%. And all other three elements are the parts of turnover only. So now we have to find out the percentage of cost, percentage of expenses, and percentage of profit in turnover. So how we are going to do that? See, we have to take base turnover. We have to take turnover as base. Now for cost of goods sold, it is 60,000, right? Cost of goods sold is 60,000. Take turnover as base, that is 1 lakh rupees into 100. So it will be 60%. The percentage of cost in sales is 60%. Then expenses, operating expenses, it is 20,000. So 20,000 divided by base, that is turnover 1 lakh rupees, is into 100 is 20%. So the part of operating expenses in turnover is 20%. Cost holds 60% in turnover, expenses holds 20%. And again net profit is 20,000, that means 20%. Okay. So that's how we find out the percentage of each and every element. Understood? This is how we have to find out the percentage of each and every element. Is it clear? Is it clear to you all? Now see how we compare our own company with some other company. How we are going to compare it, how the comparison is done. In the same example, let's take one other company also, that will be B Limited. Okay, let's take another company, that is B Limited. Now the turnover of B Limited is rupees 10 lakh rupees. 10 lakh rupees. Okay. Cost of goods sold 6,50,000. Operating expenses 1,50,000. And the balance amount will be profit 2 lakh rupees. Okay. So the turnover of B Limited is 10 lakh rupees. Then cost is 6,50,000 rupees. Operating expenses 1,50,000 rupees. And the balance amount profit is 2 lakh rupees. Okay. So with these figures, with this data, can you tell me which company is better, A Limited or B Limited? Which is more efficient? Just by seeing the figures, can you tell me which one is better? Which one is in better position? Can you tell me? Okay. So can we say that B Limited is having more profit? So B Limited is better than A Limited. B Limited is having more profit, so it is more efficient. Can you say that? Can we say that B Limited is better than A Limited because B Limited is having more profit than A Limited? That is 2 lakh rupees. and A Limited is only having 20,000 as profit. Can you say that if we compare 20,000 and 2 lakh, obviously 2 lakh is better. So B Limited is better than A Limited. Can you say that? If you agree to this point that B Limited is much better than A Limited, then you are wrong. You are wrong. Just by watching the figures, we cannot say that which company is better. We cannot say that, because please see that the turnover is also different. A Limited is a small company having less turnover, but B Limited is a larger company. It is having more turnover, 10 lakh rupees as turnover. So there is difference. B Limited is having 10 times turnover than A Limited. 10 times turnover of A Limited. So how can you say that just by watching the figures that B Limited is better than A Limited? No, we cannot say that. See, first we have to find out the percentage of B Limited also. Percentage wise, we will see that. Let's take 100% for sales. Base is taken as 100%. Then 6,50,000 for cost of goods sold divided by 10 lakhs into 100. It will be 65%. So the cost is 65% in B Limited. Then operating expenses, 1,50,000 divided by 10 lakhs into 100. So it will be 15%. And net profit, 2 lakh divided by 10 lakh into 100. It will be 20%. Okay. Is it clear? So now compare this. You can see that the profit margin of A Limited and B Limited is same. Both are having 20% as profit margin. The profit margin is same. So now which is more efficient? Tell me which is more efficient. Which one is better? Which one is better? Both are having 20% as profit margin. That means both are earning the same profit as per their size. The profit is according to the size of the entity, the size of the company. So through common size statements, the element of size is removed. The element of size is removed. Now only we have percentage. So we have to compare the percentage. See, both are having net profit for 20%. The profit margin of both the companies is 20%. So now let's compare element wise. A Limited is having 60% as cost. A Limited is having 60% as cost. But B Limited is having 65% as cost. So can we say that A Limited is more efficient because it is getting same profit margin. It is generating same profit with the given turnover but with less cost. But B Limited is using more cost. B Limited is incurring more cost, but still somehow it is managing to generate the same profit margin, to maintain the same profit margin, right? So if we see cost wise, then A Limited is more efficient because it is using less cost, it is incurring less cost to generate same profit margin, to maintain same profit margin. But B Limited is incurring more cost, but still it is managing to maintain the same amount of profit margin. Okay. So according to cost, A Limited is more efficient, but the profit percentage is same. So both the entities are equal. Both are equally profitable. So if we are only going to see the figures, then we have to prefer the size. We have to refer the size of both the companies. But through common size statements, the element of size is removed. Now we are only comparing the percentage. We are only comparing the percentage. So that's why this is called common size statement. Common size statement. Okay. So is it clear to you all? Is it clear? I hope the example is clear to you all. Please copy this. It will help you to remember the concept. So is it clear how we have to find out the percentage of each and every element taking turnover or total assets as common base? Okay. So let's move to the question. One question is given. We have to prepare common size income statement and balance sheet of A Limited and B Limited. And then we have to analyze. Then we have to compare A Limited and B Limited. So first we have to make the common size balance sheet and income statement of A Limited and B Limited. So income statement is given and also the balance sheet is given. In one box, one table, income statement is given, and in the other one, balance sheet is given. The items of balance sheet are given. Okay. So what we have to do now? Let's solve this. Illustration number 2. What we are solving? Illustration number 2. So first we are going to make common size income statement. Common size income statement. We are preparing common size income statement. So you have to make 5 columns. You have to make 5 columns. The first one will be particulars. The first one will be particulars. Okay. Then A Limited. Here we have to insert the figures of A Limited. Income statement of A Limited. We have to put the figures of income statement of A Limited. Then percentage of net sales. We will take turnover as base because this is income statement, right? Then in the fourth column, B Limited. Now we have to put the figures of B Limited here. Then percentage of net sales. Okay. So please make 5 columns. I am not putting any lines and all, but you have to make the proper format. You have to make proper format. Please make the tables and all. You have to insert the rows, columns, everything. Please do proper formatting of each and every answer in tabular form. Otherwise, the checker may deduct your marks. Okay. So see, what we have to do now, we have to put the figures of income statement of A Limited and B Limited. Then we have to convert it into percentage, taking net sales, the turnover as common base. The first thing is net sales only. The first thing is net sales. What is the amount of net sales? 25,38,000 and 9,70,000. 25,38,000 and 9,70,000. So as I told you, whatever is the base, it will be always 100%. So we don't have to calculate anything. It is 100%. It will be 100%. Okay. Then the next thing is cost of goods sold. Cost of goods sold. So it is 14,22,000 and 4,75,000. So we have to find out the percentage. Now what we will do for cost of goods sold for A Limited, take the amount of cost divided by the base, which will be 25,38,000 into 100. Okay. So what will be the answer? It will be 56%. 56%. Likewise, for B Limited, 4,75,000 divided by 9,70,000. Taking turnover of B Limited as base, it will be 49%. 49%. Okay. Next is gross profit, 11,16,000, 4,95,000. I am using shortcuts here, cost of goods sold as COGS, gross profit as GP. But please in your examination, don't do this. Please don't use shortcuts. So now for GP, 11,16,000 divided by the sale amount of A Limited, 25,38,000 into 100. Please calculate it. And here in B Limited, we have to take 4,95,000 divided by 9,70,000. So it will be 51% and this will be 44%. So this is how we have to do. This is how we have to do. I am going to do it for A Limited. You have to do B Limited by yourself. Try to do it yourself. Do it by your own. Next is selling expenses. Selling expenses is 7,20,000. I am doing for A Limited only. Selling expenses, that is 7,20,000. 7,20,000 divided by 25,38,000 will be 28.4%. 28.4%. Then the next one is Administrative expenses 1,84,000. Administrative expenses 1,84,000. To find out the percentage, 1,84,000 divided by 25,38,000 will be 7.2%. 7.2%. Then total operating expenses. Operating expenses is 9,04,000. 9,04,000. So 9,04,000 divided by 25,38,000 will be 35.6%. It will be 35.6%. Then next is other income. Other income. Sorry, operating profit. Operating profit is 2,12,000. 2,12,000. So 2,12,000 divided by 25,38,000 will be 8.4%. I am not writing the formulas. I am not writing the calculation. If there is any doubt, you can ask me. What we are doing, we are taking the figure of each and every element, the amount of each and every element, and then dividing it by the turnover, the amount of turnover, the common base, that is 25,38,000 into 100. So that's how we are calculating the percentage of each and every element, by putting the figures. Okay. After operating profit, there is other income, which is 26,000. Other income is 26,000. That is round off 1%. We are rounding off the figures also, the percentage also. We are rounding off the percentage. So 26,000 is approximately round off 1%. Okay. Then expenses. Expenses. First of all, wait a second. First of all, other expenses. Other expenses is 40,000 and 29,000. Sorry, 40,000 for A Limited and 29,000 for B Limited. 40,000 other expenses. So 40,000 divided by 25,38,000 will be 1.6%. 1.6%. One more thing, see. If you can see here, net amount is given. Net amount is given 2,38,000. 2,38,000 net of all this. Net of all this. What we are doing here, sales minus cost of goods sold plus gross profit. Sales minus cost of goods sold is gross profit, right? Then we are deducting selling expenses, administrative expenses, operating expenses, and then we are getting operating profit, in which we are adding other income. So 2,12,000, that is our operating profit plus other income. It will be 2,38,000. It will be 2,38,000. So we can find out the percentage of this also, this net amount also. So if you want, please find out the percentage of this amount also. So basically what we are doing here, this amount, this is net of all these elements, all of these elements. Sales minus cost of goods sold will be gross profit. Then we are deducting the expenses from gross profit, and then we are adding the other income in operating profit. And then we have to deduct the other expenses also. So other expenses is 40,000. It is 1.6%, approximately 1.6%. Then profit before tax, it is 1,98,000. 1,98,000 divided by our base 25,38,000, it will be 7.8%. 7.8%. Then income tax is given 68,000. 68,000. So 68,000 divided by our turnover, which is 25,38,000, it will be 2.7%. It will be 2.7%. And at last, what is given? Profit after tax, 1,38,000. 1,38,000. So 1,38,000 divided by 25,38,000 will be 5.1 percentage. 5.1%. So the given net profit, our PAT, profit after tax, is 5.1% of turnover. Profit is 5.1% of turnover. Likewise, you have to do for B Limited also. I am giving you 2 minutes. Please complete B Limited also. Then I will tell you the answers. Please complete it. Is it clear what we are doing? Okay, so let's do it for B Limited also. Selling expenses 2,72,000. Right? 2,72,000 divided by 9,70,000 will be 28%. Then administrative expenses 97,000. 97,000 divided by 9,70,000 will be 10%. Then total operating expenses 3,69,000. 3,69,000 divided by 9,70,000 will be 38%. 38%. Okay. Then operating profit. How much is operating profit? 1,26,000. And other, no, 1,26,000 divided by 9,70,000. It will be 13%. It will be 13%. Then other income. Other income is 10,000. 10,000 divided by 9,70,000 will be approximately 1%. Approximately 1%. Okay. Then other expenses. Other expenses is 29,000. So 29,000 divided by 9,70,000 will be 3%. 3%. Then profit before tax. Profit before tax is 1,07,000. Income tax is 28,000 and PAT is 79,000. So 1,07,000 divided by 9,70,000 is approximately 11%. And 28,000 divided by 9,78,000 will be 2.9%. Then 79,000 divided by 9,70,000 will be approximately 8.1%. So this is how we have to find out the percentage of each and every element given in the income statement and balance sheet. So I have solved income statement for you all, and balance sheet you have to solve by your own. It is homework for you all. It is homework. You have to make common size balance sheet by your own. It is homework for you all. In the next class, we will discuss the balance sheet, the answers, and then we will do the analysis. I will tell you the analysis, how we have to compare. In the next class, I will tell you how we have to analyze and compare. But you have to solve balance sheet first. You have to make common size balance sheet first. Then only we will do the analysis. I hope this much is clear to you all. Is it clear? Please copy this. Likewise, you have to do for balance sheet also. But in balance sheet, remember one thing, you have to take total assets in base. You have to take total assets as base. The amount of total assets, that is 20,06,000. This. You have to take 20,06,000 as base. So put amount of each and every element divided by base, that is 20,06,000 into 100. Then you will get the percentage. Please copy this. I am giving you 2 minutes. Please copy this. Done? Is it done? Please do balance sheet as homework. Make common size balance sheet in homework. Then in the next lecture, I will tell you the answers and we will analyze. So this was all about common size statements. Common size statements. I hope it is clear to you all. What is the purpose of making common size statements and how it works? How analysis is done on the basis of common size statements. How we compare our own company with some other company or organization in the same industry. I hope it is clear to you all. If it is clear, let's move to the next topic. The next tool we are having trend analysis. Trend analysis. Now we are going to learn trend analysis. Now what is trend analysis? If we want to see change in a particular element, like suppose for turnover, if we want to see change in turnover in any other element like profit, inventory, so then we use trend analysis. Here also we are comparing. But only for a single element. We are comparing a single element only. For example, it will be clear with the example. In trend analysis, we find out the trend if there is any growth or decline in a particular element. For example, turnover is given. Turnover is given. For 5 years. Turnover is given for 5 years. 2020, 2021, 2022, 23, 2024. Turnover is given for 5 years. In 2020, it was 1 lakh. In 2021, it became 1,25,000. In 2022, it became 1,50,000. In 2023, it became 1,75,000. In 2024, it became 2 lakh rupees. So can you see any trend here? Can you see any trend? Obviously, there is upward trend. The turnover is growing year by year. The turnover is growing. So here also we have to find out the percentage of growth in each year. So on the time basis, if we want to find out that how much one particular element is growing, then we use trend analysis. In trend analysis, 1 year is taken as base. So here we are taking 2020 as base. Here we are taking 2020 as base. So 2020 will be kept as base. We will take 2020's turnover as base to find out the comparative change in each and every year. If we want to find out that how much turnover is grown in 5 years, then we will use trend analysis. So there is a time factor also. 1 year is taken as base and all the other figures of all other years are compared with that base. So if we want to find out the growth, how we will find out? First, for 2021, 1,25,000 divided by, we will take 1 lakh as base because 2020 is base year. So we will take amount of 2020 only. So 1 lakh into 100. First of all, take 100% for 2020. In 2020, it will be 100%. I told you whatever base is taken, it is always 100%. Okay. So take 2020 as 100%. Then for 2021, 1,25,000, the amount of 2021 divided by 1 lakh, which we have taken as base, into 100. So it will be 125%. It will be 125%. So the turnover in 2021 is 125%. That means there is a growth of 25%. There is a growth of 25%. Then in 2022, it will be 1,50,000 divided by 1 lakh into 100. It will be 150%. It will be 150%. So you can see that in 2021 it was 125%, and in 2022 it grew by 25% again. But in comparison of 2020, it is grown by 50%. It is grown by 50%. So we are going to compare it with 2020 because we have taken 2020 as base. We are watching that how much turnover is grown in 5 years, from year 2020 to year 2024, how much it is grown. So we are taking 2020 as base to compare it with 2020 only. Then in 2023, it will be 175%, and in 2024, it will be 200%. Okay. So is it clear? So you can see that if we compare the turnover of 5 years, it has grown from 100% to 200%. That means it is double now. It is 2 times now. So in year 2020, it was 100%. In year 2024, it is 200 times. 200% into 2 times. 200% means into 2 times. 2 times of 2020. So that's how we have to find out the trend. There is upward trend in the turnover. Whatever element is given, turnover, EBIT, profit, inventory, whatever is given, we have to find out the trend. How much it is grown or declined in years which have given in question. So this is how we are going to find out the trend. See what is given in book. Trend analysis indicates change in an item or a group of items. Change in an item or group of items over a period of time. So there is a time factor and helps to draw the conclusion regarding the changes in data. We can conclude that how the data is changing year by year. It shows the direction in which the concern is going. Is it moving upward or downward? A base year is chosen and the amount of item for that year is taken. One base year is chosen. We chose 2020 as base in the example, and the amount of item for that year is taken as 100 for that year. So the trend percentage is taken 100% for the base year. Trend percentage will always be 100% for the base year. On the basis of that, index numbers for other years are calculated. So this thing, what we were doing, this is index. This is index. We are finding out the index, this trend percentage. So on the basis of that, index numbers for other years are calculated. We are doing this to find out the index number for other years. These are index. Okay. And this is the formula for index. So is it clear? Is it clear to you all? Now we have one question related to this. It is also very easy. One question for 7 marks may come in your exam. Please try to score the full 7 marks because it is very easy. This is very, very easy. Now we are going to solve illustration number 3. Illustration number 3. So 3 items are given: sale revenue, sales, inventories and EBT. Sales, revenue and EBT. Sale, inventory and EBT. So we have to find out the trend percentage, the change in 5 years and index number. Trend percentage is only the index number. So I am going to do sale revenue and you have to do inventory and EBT in homework. I am going to solve sales revenue and you have to solve the other two. Then I will tell you the answers and analysis in next lecture. See, first write particulars. First you have to make 6 columns. 6 columns. First one will be particulars. Particulars. Then one column for each and every year. So we are having 2008, 9, 10, 11 and 12. 2008, 2009, 2010, 2011, 2012. Then in particulars we have to write sales, inventories, then EBT. Now we have to find out the index numbers. First, see, whatever you have to solve, please solve it in working note. So the first working note will be for sales revenue. Sales revenue. Okay, for 2, see, you have to take first year as base. We will take 2008 as base. We are going to take 2000 as base. So the base year is 2008. So the sales revenue, inventories and EBT for base year will be 100%. It will be 100% for the base year. Okay. Then we have to find out it for 2009, 2010, 2011 and 2012. So how we are going to find out? First, in first working note, we are finding out the sales revenue, the trend of sales revenue. So we have to find out it for 2009, 2010, 2011, 2012. First, we will write the turnover of all those years. 2450, 2765, 3131, 3878. 3878. Okay. Now we will divide it by the base year 1992. 1992. Into 100. Into 100. So please calculate this. Please calculate this. It will be 123%, 123%, 138.81%. For 2011, it will be 157.17%, and then 194.68%. So we have to find out the trend for all these three elements: sales revenue, inventories and EBT. So here we are going to write whatever we have calculated. In 2009 it is 123%. In 2010 it is 138.81%. In 2011 it is 157.17%, then 194.68%. Okay, likewise you have to do for inventories and EBT also. Please do it for inventories and EBT also. Then I will tell you how to analyze it, how to analyze through trend analysis. First, you do for inventories and EBT also. It is a homework for you all. So solve it, and in next lecture I will tell you the answers and the analysis. Answers and the analysis. Okay. So don't forget to do your homework, and if you have any of the doubts, please ask me today itself. Ask me today itself. And please solve both the questions. Complete it. Then I will tell you how to analyze. Okay. So we will meet in our next lecture.